howdy there, folks. You've made it. Yes, you've made it to the first big week of earnings. Holy smokes, this ain't no dang jokers, okay? I got a lot to talk about in today's video. We got to talk about, obviously, the earnings coming this week. There's several very important companies that are going to move the market that are reporting this week, including Tesla, my Tesla. They are reporting earnings here in the next few days. I want to talk about my expectations for the stock, for what's going to happen with the numbers, those sorts of things. I want to talk about some moves I'm going to make this week, depending upon if the market's up big, down big, or anything in between. A lot to get into. Just a very, very busy video. Hope you guys enjoy this as always. I appreciate each and every one of you being subscribed to the channel. Thank you so much for being here, okay? And by the way, right now for a limited time, get some free stocks from moomoo with the pinned comment down there. They're giving away up to 15 free stocks right now, which is absolutely amazing, valued up to $2,000. So check out the pinned comment and take advantage of those free stocks, okay? Alrighty, let's get started here. So first, where I wanted to start this video is just kind of taking you guys through where the market's at, okay? So basically, the NASDAQ is now down 36.2% off all-time highs. Almost all of that's come this year in 2022. The max drawdown came a couple of trading days ago when we were down almost 38%. Now, this is important, what I got here, okay, right here, right? So this is looking at the markets from where they were prior to Rona happening, right? And a lot of people have wanted to see us wipe out all the gains that came with Rona. And we've almost done it now at this point in time. The Dow's at about the same level it was prior to Rona. The Russell's lower. That's crazy to think about. The Russell's lower today than it was prior to Rona, right? And the NASDAQ and S&P 500, they're getting pretty darn close. So essentially, we've wiped out every bit of progress the market made over the past, several years since Rona. And all that stimulus money, all that stuff, it's basically been wiped out of the market now at this point in time, which is quite intriguing. So that's where we're at, okay? Now, this is interesting. I don't know if you guys saw this here, okay? Amazon shoppers appear to have shrugged off promotions for the discounted phone chargers and air fryers during this week's Prime Day sale bonanza. Okay, I've been a Prime member for a long time. I didn't even know there was this sale going on here, okay? For 48-hour event dubbed a Prime Early Access Sale, ran through Wednesday. For Amazon, the event tested how its members' Prime subscription program would respond to two major discount events in the same year. So the other one they did back in July. Amazon on Thursday said that tens of millions of Prime members ordered more than 100 million items. This is Amazon. The numbers are going to be massive. So, you can't really take too much into account for something like that, right? But data collected by third-party analysts give a deeper look into how Prime Day, basically did. And what they're saying is sales during the week's event seem lighter compared to the Prime Day in July. Bank of America analysts said they estimate Amazon brought in about $5.7 billion of revenue, which is still an incredible number. Like, that's still sick that they could do a sale and just generate 5.7. Like, that's amazing that could be a potential disappointment, right? It's like, hey, we wanted to test out the sale, and gosh, we only did $5.7 billion of revenue. Dang it. What a disappointment. So it just speaks volume to, I think, Amazon's business model. And, I don't think they might have marketed this one the best. Let's just put it that way, okay? Now, in terms of Amazon stock, this stock's down over 37% year to date now at this point in time. You may look at Amazon stock, you may say, oh, it's so richly valued. I would love to buy Amazon. It's a beast, but it's too richly valued, right? P/E ratio of 95. Well, here's the thing with Amazon, okay? The forward P's at 44 for this company, which is actually very, very low for Amazon. So actually, Amazon's a pretty darn good buy if you've ever wanted to get into Amazon stock. I think for the next few months, you've got a pretty rare opportunity here to get Amazon for, let's just call it significant discounts compared to where this company is usually trading at. And obviously, Amazon still has incredible growth ahead in their e-commerce side of their business and in their cloud business, plus other businesses as well, which they're in so many businesses, it's ridiculous. So yeah, you got, in my opinion, like a 3 to maybe 5 month span in front of you where you can add Amazon shares for a very nice discount. But it depends also on the market. If the market comes back faster than expected, and let's say we get a big rally November, December, then you're not going to have all that time. I'm just putting it under the assumption that the market stays kind of where it is, or it even trends down a little bit, okay? Now, obviously, that looks very rich compared to something like Meta, right? But Meta is a steal deal of the century right now, and you can't expect, Amazon to trade down to those sorts of levels. Something in regards to Meta, I saw the MKBHD posted this, who's one of the most important people in the world in the technology sector, and his opinions and those sorts of things is man, his following is ridiculous. That's all I'm going to say about that. There's pretty much no one that is more important. And so he posted this on Twitter. He says, I have some thoughts about the VR headsets that are coming, and he posted this little video on, basically all these screens popping out and things like that, and being able, like, none of these displays, he basically had up 3 displays here. Those displays aren't real. Those were all VR displays essentially, which was absolutely amazing. And that just really like opened up my mind to like the amount of applications and things in the metaverse is going to be ridiculous. And I can even see a day in which essentially physical. This is more down the road, so I don't think this is happening tomorrow, but I can see a day where there's really no need for physical screens of any kind, to be quite frank. That's still quite a ways away, but I see us getting there eventually over time, which is going to be pretty darn amazing. And, I saw something like this. The hardware savings possibilities are just infinite. This is very exciting. It reminds me of Jarvis, right? You guys ever watch the old Iron Man movies from, like, I don't know, when did Iron Man come out? 2007, 2008? And obviously Iron Man 2 as well. And he's got all these amazing screens, and it's all like digital and stuff like that. And he's manipulating things like putting this here and that there, even though there's no actual screen there. And it's cool that all these years later we're starting to get to the let's call it the infant stage of that progress essentially. So it's actually happening. And when I saw this, it made me want to buy more Meta stock, to be quite frank. But not only that, you really start to understand why Apple's attacked Meta so hard and try to hurt them so bad with the whole move around data and sharing data and things like that. That's hurt Meta's business model substantially. And you might say, well, Apple's just being the good guys there. It's a great opportunity for Apple to brand, build their advertising business, and hurt Meta. Apple understands that the biggest threat to them over the next 10 to 20 years is Meta. Without any I look at all this stuff in the tech space. I don't think there's any bigger threat to Apple than Meta, to be quite frank. And I think Apple definitely, and Tim Cook definitely recognize this. And so they're going to do everything impossible to hurt Meta and slow them down. Because if you ever even think about the possibility of basically not needing physical screens and things like that, like, where does Apple make all its money? Hardware, a physical phone, an iPad, a Mac, a MacBook, all those sorts of things. And if we're talking about replacing those down the road, right? It's not happening tomorrow, but over time, that's obviously a substantial threat to Apple. So I think Meta and Apple are going to go head on head, basically over the next decade or two, basically competing in this space. And it's going to make the winner of that, it's going to be like a $10 trillion type company. Like, it's going to make the smartphone opportunity look like child's play, to be quite frank. And that's crazy to think about, because the smartphone's the biggest thing that come around, in terms of the economy, certainly of the last 20 plus years. And the metaverse is going to be exponentially bigger than that. When you really start to dive deep into this and you start to understand where this whole wave's going, and the opportunities there, it's incredible. So if you haven't spent a lot of time thinking about the metaverse, trust me, spend some time there and really start to understand and think about where things are going over the coming years. Don't just think about where the technology is today and those sorts of things, because what I'm seeing is a massive mistake that's going to come back to bite a lot of people, where they're throwing this it's just some video game thing or something like that. And I'm just like, no, this is literally going to change the way everything's done, including business, and the way the largest companies in the world operate their businesses and things like that. So massive thing, just pay attention to it, okay? Alrighty, so let's get into what's going on this week. A lot of craziness, okay? First thing is Monday morning, Bank of America is reporting before the market opens. Most of the other big financial institutions reported on Friday. So I think Bank of America earnings are important, not just because it's Bank of America and it's a massive bank, right? But because it's happening Monday morning before the market opens. If you're thinking about the vibes of this week, it's important that if you want to set a positive vibe, the numbers need to be somewhat decent. If Bank of America comes in with massive misses, oh my gosh, to set the vibe of the week right off the bat in a negative spot, coming off a very negative week, oh gosh, that's going to be another ugly one, right? So I think for the state of the market, it's very important that those earnings are at least decent. And if we saw what happened with the other banks, they reported okay numbers. Nothing, kind of in line with what analysts expected. A few numbers were better, a few numbers were worse, but nothing too crazy, right? Now, in terms of Tuesday, that's when we really start to get a lot of these earnings coming out. In terms of the companies I'm personally paying attention to, before the open on Tuesday, Goldman Sachs, premier investment bank out there. And obviously they got a lot more in commercial over time. Lockheed Martin, I'm going to take a good peek at. Lockheed Martin, obviously defense contractor, and just a company that, with everything going on, they should be thriving in terms of their business. I don't personally own the stock, but it is one I'm just kind of keeping an eye on, right? After the close on Tuesday, Netflix is going to report numbers. Netflix is a stock that's been obviously hurt in a substantial ways, down 50+% year to date. It has started to come back over the past few months off its June bottom, which was $100 and something a share. I think it was 175 or so. And that stock's trading at 200 and some change right now. So what everybody's going to be focused on for Netflix, two things. User metrics. Are they acquiring more new customers and things like that? The second thing everybody's really going to be focused on for Netflix is that advertising side of their business, which is something that's just about to start here. Pricing around that, how much they're going to make from companies, things like that. So we're going to see what happens there in terms of what I've heard CPM-wise. They're supposed to get pretty much the creme de la creme CPM numbers of anybody out there. And I've heard that basically listening to the Fubo latest investor presentation and or kind of fireside chat they had. They had talked about the numbers that Netflix is likely going to get, and their numbers that are higher than pretty much an advertiser's paying anywhere else, to be quite frank. And it's not even close. So that's going to be interesting. Intuitive Surgical is a company I've never personally owned, but I've always been fascinated by them. Basically robots that help you do surgery. It's pretty fascinating stuff. So I'm going to definitely, be interested to hear kind of what numbers they put up and things like that. Okay. Now, Wednesday, big day for earnings. So in terms of what I'm paying attention to, Procter & Gamble, before the bell on Wednesday. And the only reason I want to hear what Procter & Gamble has to say is because I own a company named Honest, HNST, which they're at a very different stage of their business model than Procter & Gamble. But I just like to kind of pay attention to what Procter & Gamble's reporting for margins, for numbers, things like that. And then try to see what Honest is going to do for numbers, okay? Ally Bank I think Ally Bank's intriguing. The valuations come down substantially for that. And with savings account rates actually starting to go up again, I wouldn't be surprised if Ally actually attracts a lot of customers over the next year or so. I think there's a high probability of it because if you're thinking about a savings account related company, Ally is usually one of the first that people think about. And so I wouldn't be surprised if they actually get more assets under management and I don't really want to call it assets under management, just add more assets in general and more customers, to be quite frank, okay? Tesla, we'll come back to Tesla in just a moment. The other company I'm paying attention to after the close is actually Knight and Swift. They're reporting, and we're talking about pretty much the biggest trucking company in the United States of America, or certainly one of them. And I'm going to be very interested to hear what they have to say, because those are the sorts of companies you get an idea of what's going on in the overall United States economy, right? And as well as trucking rates and kind of any outlook there, which I've had a lot of companies that I personally own that have been destroyed with their margins because of trucking rates being insane. Trucking rates have come down substantially over the past 6 months, and I'm kind of interested to hear what they have to say about that, okay? Good old Tesla Miles is reporting after the bell, okay? What are we looking at here? Well, in terms of revenue, I think they're going to report probably a slight beat on revenue side versus what analysts are expecting there. And I mean a very slight beat. I'm not expecting anything crazy, but I think there's going to be a slight beat on revenue. As far as EPS goes, that's anybody's best guess. I have no clue. Analysts are expecting, from my understanding, around $1 of EPS. 62 cents a year ago, I have no clue. I mean, there's so many moving parts there. Tesla's a global company now at this point in time. It's still rapid growth. With everything going on with inflation, supply chain messes, how much was coming from the European gigafactory versus the Shanghai gigafactory versus the United States ones. Austin obviously getting ramped up there. I mean, the EPS for Tesla is going to be messy. I have no clue. I wouldn't be surprised if they barely make a profit. I wouldn't be surprised if they report $1.50. I mean, it's going to be a messy one. But I mean, as far as expectations from Wall Street, they've gotten higher because Tesla's just executed on a phenomenal level. Okay. Now, when it comes to Tesla stock, right? This stock's down almost 50%, basically year to date, right? So, the stock's been hurt, right? But that's the smaller part. Here's the deal. This is a chart that I pulled up here just over the past month. This is a 1 month chart for Tesla. Stock's down over 31.4%. Now, if the stock's also down, let's just say slightly, or around break even on Monday, Tuesday, the setup going into these earnings for Tesla is actually really, really bullish, because the stock has been devastated and everybody's expectations are very, very low, right? And so then if Tesla just comes in with decent, you're likely going to get a pop out of the stock, at least in the short term. So it's rather intriguing. I mean, usually you don't see it where a stock's down 31+% on a 1 month basis, and then the stock goes down even more, after their earnings, for at least a legit, great company like a Tesla is, right? So yeah, it'll be interesting to kind of see how that plays out. If I'm thinking it's probably going to move up more than down after earnings, unless of course Monday, Tuesday stock moves up in some big way or something like that. Okay. Now Thursday, a few interesting companies reporting that I have my eye on, and they're all after the close on Thursday. One is Snapchat. I'm going to discuss Snapchat more in just a moment. One, CSX Railroad, which is a rail operator, very important to pay attention to there if you want to know how the global economy is doing, and really the United States economy is doing. Samuel Adams, I'm almost interested in buying that at one point. I'm not really interested anymore. But yeah, Sam. And then Whirlpool. So Whirlpool is obviously a massive appliance maker. Their business should be relatively strong right now, although their profitability could be hurt for many various factors. But, Whirlpool, I think they're going to have troubling numbers in 2023, just to be quite frank. I think housing is going to be in a tough spot. And I think, there's not going to be a lot of people going out there and rushing out there to buy appliances next year unless they absolutely need to. So I think 23 is going to be a rough one for Whirlpool, in my personal opinion. Okay. Now, in regards to Snapchat, there's a stock that's less than $10 now. At this point in time, it closed at $9.99. Stock's down about 80% year to date, which is one of the roughest moves you've seen from a company that's widely known out there. Okay. It's interesting. I thought Snapchat was kind of irrelevant, right? And obviously I see their monthly numbers and in daily active user numbers, but in terms of just seeing it out there in the real world, I don't know anybody that personally uses Snapchat. I don't personally use Snapchat, but it was interesting. So I went to a Bad Bunny concert with my wife, this is a few weeks ago. And I know it might be creepy, but I look at people's phones, okay? If I'm out at a big public event like that, I love to see what people are doing on their phones. So I keep an eye out, what's this person doing on their phone? What's this person doing on their phone? Okay. And it was fascinating because the amount of people I saw posting on Snapchat at this Bad Bunny concert was a pretty large amount. And I just thought that was intriguing that, wow, these people are choosing to post that they're at this concert on Snapchat. So that was really intriguing. And then I went, last weekend to Tuscaloosa, Alabama for the Alabama game. And I was phone watching again and saw the similar phenomenon again, which is people posting on Snapchat. So I just thought that was interesting. By the way, you can tell who's trained for media, right? And who's not. Look at me. I look at the camera. Other people look at the actual phone screen, right? So that's intriguing. But in terms of Snap, when this company went public, their revenues were non-existent. And now this is a company that's expected to do over $5 billion of revenue next year with profitability. So yeah, it's interesting. Is Snap a stock I'm going to buy? Probably not, but I wouldn't be surprised if Snap actually performs pretty darn well over the next few years, just to be honest. So we'll see what happens with that, okay? I'll be paying attention to their earnings Friday before the open. American Express reports. American Express, important company to understand how the global economy is doing. I think American Express is going to have really strong numbers. American Express definitely thrives from people traveling. Travel's back, man. Travel's back, and it's going to be back even more next year. So in 2023. So I think American Express is going to continue to put up actually really, really good numbers, just to be honest there, okay? But definitely going to be paying attention to that one, okay? Now, what am I going to do in the market this week? Well, here's my plan, okay? If we're in a big up week, I'll probably just chill in the market this week because I've been buying stocks like crazy. If we're down big, my three main stocks that are my focus this week will be Palantir, Meta, and Fubo for buying. If we're in a kangaroo market, who knows? We'll see what happens if we're in that sort of market that's just up, down, all and around. But yeah, that's it. That's my plan. If we're down big this week, those are my three stocks I'm going to focus on adding more shares of in the public count. So hope you guys enjoyed this video. As always, hope you're ready for a week. Finally earning earnings season's here, baby. It's here, okay? Make sure you check out the pinned comment down there for a limited time. Get those free stocks from moomoo, up to 15 free stocks valued up to $2,000. That will be pinned comment down there. Much love as always, and have a great day.